Welcome to Breaking Banks.
Joining us today is Andrea Jung, President and CEO of Grameen America. If you know anything about them, they're the fastest growing microfinance organization in the United States. And Eugene Danilkis, the co-founder and CEO of Mambu, the core engine powering digital-first banking and lending. So we're going to be discussing how the partnership between Mambu and Grameen has powered each other's growth and improved the lives of underserved and underbanked customers. And where are you guys both coming to us from today? Which part of, I know, Andrea, you said you're in New Jersey, right? New York based.
Yes, but we are normally based in the New York area.
Fantastic. And Eugene, yourself?
I'm calling from an island in north of Holland right now. I've actually been based in Amsterdam for the last year and a half, and I'm spending this little week just up in the very north, so close to the North Sea here, Northern Europe.
Awesome. Very cool. I was going to see if you were at the International Space Station right now testing out the software, but no, obviously not. But
no, that's next week. Next week.
Did you see SN11, the rapid unscheduled disassembly today?
No, I did not actually.
Yeah, so when they tried to restart, they had a problem with one of the Raptors. So anyway, moving on. First of all, Andrea, Grameen has obviously a storied history from the work of Muhammad Yunus back in April 2014. Of course, in Grameen's early days, what was really significant of Grameen's work on the subcontinent was that particularly strong in offering microloans to women. And a really interesting statistic that I recall from the early days of Grameen is that Grameen also had a much lower NPL as a result of the fact that they lent to women. So using that to sort of start off, can I ask, what's the lending profile like in the United States? And are you seeing sort of similar benefits of investing in lower to middle income women in the United States, like you did offshore?
Yeah, thanks, Brett. The answer is yes and yes, meaning, we were founded in the United States in 2008. Interestingly, in the last global debt crisis, didn't have the health aspect to it that we're facing now in 2020 and 2021 with COVID-19. But the organization was founded based on really the track record and the vision of the Grameen Bank, decades ago before that in Bangladesh. Interestingly, microfinance, which worldwide had become a real opportunity, particularly to help women in their pathway out of poverty, was perceived as something for, as you mentioned, the emerging markets, for Bangladesh, for India. Right. And so there was a lot of skepticism about whether would it work in the, in the first world markets, in the, the rich nation of the United States. And interestingly founded in 2008 in Jackson Heights, Queens in New York, just, kind of a couple miles from Wall Street. So it's sort of at the center of the financial capital markets, the question and skepticism of would microfinance work? And would the Grameen program work in the US? Almost 13 years later, I think we're here to say
the answer is clearly yes.
Clearly, over 130,000 women with extraordinary number of loans. I mean, I think we've given out 628,000 loans to women, and the NPL, to your point, I mean, it's over 99% has been the repayment rate over more than a decade across 15 cities and 23 locations, which I think just speaks to the extraordinary power of the model, but most importantly, the members themselves. We've long believed that the opportunity for financial inclusion, the opportunity for access to capital should be regardless of gender, of race, of income level. And so Grameen was founded on offering women, low-income women, 99% of our women are women of color, but giving them the opportunity to have equal access to not just capital, but financial training, the opportunity to build a credit score, the opportunity to have asset building with weekly savings. And all of this has proven to really be a pathway for them into financial inclusion, which was not offered, unfortunately, even pre-2008. And then after the debt crisis here in the United States, if you were a low-income woman, in particular, entrepreneur looking to get access to capital, it almost became impossible, with the exception of usury rates and other that we really wanted to offer an alternative to. So that's how Grameen America was born.
In respect to the science of why women are so good at managing credit and lending, we've seen that pattern with Grameen's portfolio. What is it that makes women much lower likely default candidates compared with their male counterparts?
I think there's been a few aspects of the alchemy of the program. But if I just start and we look back at the history, even in original Grameen days where loans to men at the Grameen Bank in the earliest days performed much worse than loans to women, I think part of it was, Brett, the fact that for a lot of the men, it was just another loan product. They had access to it. So it was one of five. And the loyalty and the gratitude to the organization, it really didn't stand out versus something else. So you're balancing, a different debt burden and debt load. For the women who, if you go all the way back, again, 40 plus years ago in Bangladesh, they were told, come back with your husband if they went to a bank to get a loan.
Crazy, right?
Women were essentially shut out of the capital market access. And so to have an organization that trusts you when everyone else is denying you a loan, the power of that engendered in trust and loyalty, it's priceless, as they say. So the Grameen America model is that, we're trusting our members. I think we are probably the only organization where a credit score is an output of the program, but not a required input. They're non-collateralized loans, and many of these women have no credit score or a poor credit score when they come, so they would be not denied anywhere else. And the fact that Grameen wants to help them, will give them capital, and help them build that credit.
And produces enormous loyalty.
Gratitude is worth everything. The second thing is that one of the requirements of the program, benefits of the program, I would say, is a weekly training session, a weekly meeting with their relationship managers. And this happens in community. We can talk later because right now this is happening on Zoom because obviously of social distancing and the world post-March 2020. But nonetheless, the community of other women entrepreneurs, and the ability to share, to learn. Entrepreneurship's lonely and it's scary. And so to be able to have 25 or 30 other women doing different businesses, but all being able to help in a social capital model, that has been also integrally part of this, extraordinary benefit to them and also loan performance.
Yeah, I want to get to Mambu and Eugene and your role here, but just quickly before that, just so people are clear, for those that may not be familiar with the term, what is a social capital model?
So a social capital model at Grameen means that it's a relationship-based model.
Right.
And we have centers and groups of 5 women entrepreneurs together. They join a group of 5, and that group is part of a center of other groups. So there can often be 5 or 6 groups, so 25, 30 other entrepreneurs. I may be doing a restaurant. So
it's almost like an incubator style teaming.
Absolutely, and I would say to you, even before the pandemic, the support of each other, the learnings from each other is extraordinary. And then certainly during the pandemic, in a moment of isolation, just being able to have the comfort and the support of other entrepreneurs during obviously an extraordinarily difficult time has been invaluable.
Great. All right. Well, let's get Eugene to dive in here. Eugene, obviously there's a halo effect of working with someone like Grameen, but Clearly, digital is a big part of the financial inclusion formula here, particularly during the pandemic, but also in terms of access previously. One of the things we've observed more broadly in the US is that financial inclusion, surprisingly, the US doesn't do so good on that. About 20% or between 20 and 25% of households are underbanked in the United States. And so access digitally that allows, as Andrea was discussing, alternate credit scoring models and alternate engagement models and things like that. Can you talk to us about what Mambu has learned during this process in terms of working with Grameen? Has it changed your product at all, particularly around the theme of inclusiveness?
I think around inclusiveness, it really kind of reconfirmed a lot what we believed in when we started the company, because we really believed that financial inclusion had a lot to gain, both in terms of its effectiveness of existing operations to serve the customers, but also the fact that you still had so many more customers that needed to be reached with different technology and different products and services, that we felt like financial inclusion was really only going to be able to scratch the surface of the impact it wanted to have unless it really fully embraced technology. And I think the working with Grameen over the years has kind of helped to really reconfirm that, because I think it was really one of the organizations from all of the financial inclusion organizations that we work with that really kind of embraced technology as a really key enabler of the business, where others, I think in the past, might have seen it more of as a supporting function. And I think what I've seen the team at Grameen really do is they think about technology and financial inclusion at the same level. So instead of thinking what technology can we use to better reach our customers, to create additional products and services and make the lives of our customers easier, and actually looking at technology opportunities to potentially open up new ways of providing services or better services, and also starting with the same questions from the customer side in terms of what products do they need, what are their pain points of interaction, and how can we use technology to solve them. And I think starting with those conversations from both ends, you can really see an approach where there's that close partnership of financial inclusion and technology. And obviously you've seen that in tremendous results and the impact that Grameen has had over the years. And it really kind of reconfirmed a little bit of the philosophy that we had when we started working on Mambu.
Yes, tremendously important that it's sort of a team effort from the regulator down, really. So that's fantastic. Can you talk about how COVID affected operations in the US and, what your strategy there was? You've already spoken about the fact that the social aspect brought to get the people on Zoom and so forth.
Sure. Just to bridge it, Brett, though, I would just say that had we all my answers about how we fared, how Grameen America fared during COVID and how our members fared would not even be a conversation had we not been on Mambu, right? Not being on Mambu, not having the famous fix the roof while the sun is shining. I remember talking to Professor Yunus early on in the pandemic, and he was talking about the fact that microfinance is the lion's share of money movement in a lot of the towns and villages in many emerging markets, and that the social distancing, stay-at-home orders basically shut down money movement in part of the world. Had we not invested, and we had started this obviously in 2013, but had we not invested in not just the Mambu technology, but what Mambu allowed us to do, which was digitize the entire platform, we too would have had to pause. But instead, we've been able to really run the entire loan program, both dispersing as well as getting repayments from our members, 100% virtually without having to see a single one of them for an entire year, which is pretty amazing. But just to your original question, how the impact has been, I would just say two words. I mean, on one hand, heartbreaking, and on the other hand, just unbelievably inspiring. Heartbreaking in that I think we all know that the low income communities have been disproportionately affected, and our members were no exception, both from a health point of view as well as an economic point of view. Micro businesses and small businesses particularly hurt, and those run by women particularly unable to access government funding, et cetera. So, we are clearly dealing with the current reality that the pandemic since March of 2020 has been, a large impact and a significant pivot for many, many of our members. I would say, though, the inspiring aspect is that they have really learned to pivot their businesses. Food service members are turning it into catering, and they're using Grubhub platforms. 25% of our members, incorporated home deliveries. We have a lot of hair and beauty salon businesses, and they were really hard hit, but a lot of those members just really started to have Zoom consultations to teach people how to, cut hair themselves and or perform services in outdoor spaces if the weather permitted. We have tailoring shops who started selling masks and making masks. So the resilience is the word I guess I would use, was and continues to be pretty extraordinarily. But lucky, and I guess, Eugene will talk more about it, but had we not been able to pivot very quickly to complete virtual operations, and had we not had Mambu as the base for that, years before, it would have been a struggle to just at least service them and get them that, disbursement in 3 minutes if they needed it without having to hand deliver them a check. So
Now, Eugene, was Grameen one of your first North American customers? Have I got that right?
Right. Yes. Yeah. I think we worked together in 2013. So by then we must have had, I'm not sure, probably about 40 customers or so, I guess, around the world. But in North America, it was definitely the first.
Awesome. You recently, had to be fairly agile when it came to Wirecard. You guys pivoted there pretty quickly. Can you talk about how you're able to deal with those types of issues as an organization in terms of agility and your ability to pivot?
Well, the Wirecard didn't affect us directly because Wirecard was neither a customer nor a partner of ours. But of course, we saw a lot of kind of fallout effects of that. Of course, customers who might have been using Wirecard or had to actually switch away from it. And I believe, actually, Andrea, you also had a relationship with Wirecard as well, right? For one of your debit card products, if I remember right. So it was actually, the Wirecard didn't affect us directly as a business, but we saw, of course, customers affected by that. And we saw how they had to leverage the platform and the agility that Andrea was describing to be able to make technological or business changes as a result of what was happening to Wirecard.
I mean, in the old days, to switch a payment processor was an 18-month to 2-year process, right? So, Andrea, were you guys affected by that?
We were. We had to pivot pretty quickly. But we were able to do it in a matter of not months, but weeks. So we were fine.
That's pretty impressive. So, Andrea, would you mind if I ask you about, Mackenzie Scott, ex Ms. Bezos? She recently has been very active, of course, from her philanthropic efforts, exceeded $6 billion in 2020 alone. So pretty impressive. But in particular, your Economic Relief and Recovery Fund. Can you talk about her involvement in that?
Sure. I think that what Mackenzie Scott is doing in terms of sort of redefining philanthropy is so inspiring. And the not just the amount, the sheer amount that she has given back to many, many organizations over the past year, but I think the focus on the underserved, on women, et cetera, has certainly been something that, I think is making a sizable material impact, in the space. We were extraordinarily fortunate to receive a $25 million unrestricted gift from Mackenzie to really help us with the relief and recovery period that, the single largest philanthropic gift that Grameen America has received in our 12-year history. And we are
fantastic.
Not only extraordinarily grateful, but I think able to put it to good use. Our expansion plans have been aggressive and bold. We intend to, double the number of cities over the next several years, expand into new areas, new strategies, and this gift is really helping us do that.
So, Gene, before I wrap up, I've got to ask this question. I'm sure you saw it coming. Is what did working on the International Space Station control software teach you that has helped you build core systems for digitally enabled banks?
It's about the end-to-end process of building mission-critical systems at the end of the day, right? I mean, if we're building a mission-critical platform that customers like Grameen and tier one banks around the world and telcos and others, and our customers themselves serve 35 million end customers altogether right now. So we have a pretty mission critical platform from our perspective. And of course, that's just going to grow over the next couple of years. So when you were working on a mission critical system on the International Space Station, when you don't really have any room for errors, because these are multi-billion-dollar projects and modules, and in space, you usually only get one chance to get something right. I think I learned a couple of things about how to build mission critical systems and was able to apply that to the banking and lending world.
Absolutely. And just before we wrap up as well, Andrea, can you talk about just quickly sort of the diversity approach you have, or across different segments of the women of America?
Yeah, absolutely. I'll just say that this has certainly put a lens, this moment in the United States, but the world as well, on not just gender inequity, but racial inequity. And we are very excited to be launching an amplification initiative, if you would, and it's elevating Black women entrepreneurs across the United States. Our goal is to enter even more, kind of predominantly underserved Black communities across the U.S. And hopefully reach over the next 10 years 70,000 members. And allow them to have the access to capital. It's interesting.
Phenomenal.
When you look at all of the groups on.
Yeah, given the challenges that those groups face in the US today, that's obviously laudable. I know we're running out of time here, so just quickly, Eugene, where do people go to find out more about Mambu and the work you're doing with organizations like Grameen?
Yeah, definitely check out our website at Mambu.com. We have also quite a long story going much deeper into our relationship with Grameen, about how it started, what we accomplished together. So if you want to have quite a deep dive into our relationship, then go to our website and then check out the Grameen Mambu case study on there.
Fantastic. And Andrea, how can people get involved in Grameen America's mission?
Yeah, GrameenAmerica.org. If you go onto that site, our annual report is there with stories, again, like Eugene said, of a lot of our partnerships and, the many organizations that have helped us get to where we are today.
Fantastic. I feel like we've only scratched the surface here, but I am grateful for you two guys joining the show today, and the incredible work that's been done at Grameen America. It's really important work, and again, thank you, Andrea, for sharing your success story there. You've been listening to Eugene Danilkis, the co-founder and CEO of Mambu, and Andrea Jung, who's the president and CEO of Grameen America. Check out what they're doing. It's really interesting. You're listening to Breaking Banks. We will be right back after the break with our old friend, Lord Mayor William Russell, live from London, talking to us about the Kalifa Report and some other things there. But stay tuned for our next segment featuring the Honourable Lord Mayor of London. We'll be back right after this break. Welcome back to Breaking Banks. Joining us back on the show, he's becoming somewhat of a regular guest, actually, is the Lord Mayor of London, William Russell. Lord Mayor, welcome back to Breaking Banks.
Thank you for having me. And as you know, Brett, I'm in my second year.
Absolutely. Your second term. It's fantastic.
Second term. Last time that happened was 1860, 1861, long time ago.
There you go. Well, do you think you'll get a third term and then you break all the records?
I get very, my wife gets very cross with me, but I always say the divorce bill would be too much if I had a third term.
There you go. All right. Well, that makes sense. I understand that completely. So there's a lot of stuff happening in the UK at the moment. The vaccine rollout is starting to happen with some intensity. How is the feeling in London City these days? Oh, you had the vaccine?
So I had it on Friday. I had the AstraZeneca one, the Oxford one, proudly. Look, I mean, it's happening fast. We're optimistic about how we can start to think about bringing back people to the City of London. If anything, the City of London has been almost too successful working from home. That transition has worked very well. But I think confidence will grow. We've got certain sort of dates, and we're doing a phasing campaign, a reopening campaign around the Square Mile. And also we passed through Common Council just last week a motion to spend up to 50 million pounds to help all the SMEs within the Square Mile, the City of London, not the whole of London, because that would be too much. But a lot of it's around hospitality, SMEs. I remind people 99% of the businesses in the City of London are SMEs. People immediately think, oh, I had no idea, but that is the case.
It's actually not uncommon for that to be the situation in most cities. You know, they're the lifeblood of the city. It does feel different, though, doesn't it? It does feel like there's an energy building for us to return back to not necessarily the old normal, because things will never be the same, but people are chafing at the bit to get back into action, I feel. So
pent-up demand.
Exactly. In fact, the economists I speak to, the investment analysts say exactly that. We've got a lot of pent-up consumption demand and things like that. People are just waiting for the starting gates to open. So, and in terms of fintech policy, you've had some fairly significant changes or insights. Particularly, you had the Kalifa Report released recently. Tell us about the high-level review of UK fintech and sort of what that means for when things do start to come back.
Yeah, look, I mean, you know about the success of fintech in the UK. I talk about in a positive terms that the UK is the centre of fintech in the world. London, described in the Kalifa Review as the super hub, but there are lots of other hubs around the country, and that's what's so exciting. I remind people there are 146 fintechs in Scotland alone, and 1,600 fintechs in total. But Ron Kalifa, who spent a long time doing the review, as you know, is a past CEO of WorldPay, knows a lot about it. And in a way, COVID delayed his timing, but in a way also helped him because of the digitization, how fintech really came to the fore during COVID-19. And, the UK, we needed to come up with something where, what's the next stage? We want to keep the momentum going, and it's a compliment to all the many other countries in the world and cities in the world that, they're catching up. And they're doing a good job too. And fintech is here to stay, as you know. And as I also know, you and I have discussed it. I really think it should be called Tech Fin. But anyway, it is fintech. And underneath that, you've got InsurTech, RegTech, all the other areas, and now green tech coming into the fore. But we've got 10% of global market share and 11 billion in revenue in the UK, and $4.1 billion was invested into UK fintech in 2020, which is more than 5 times all the other European countries, which is a good confidence booster as we leave Europe, Brett. So, look, I think it was a good opportunity, but also I would say having the Lord Hill review about 2 weeks after that was perfect timing, because it reinforced a lot of the things we've been saying about listings. And this is a big opportunity for us to grow the listings. And you've seen Deliveroo have announced they're going to list on the London Stock Exchange. We know that in the pipeline there's potentially Wise, which was the old TransferWise. There's Darktrace. We've got some exciting companies wanting to come to the market, and so the timing couldn't have been better, really.
It's pretty interesting because obviously there's a few Chinese fintechs right now that are looking to list. They've had some issues like Ant Group, and we've seen some action taken with Tencent, similar to Ant in respect to a financial holding company or a bank holding company there. But these are going to be some very big IPOs. So I think maybe that's again one of the measures we're going to start looking at for success of a fintech hub is how many unicorns did they get to an IPO exit? Because ultimately that's one of the measures which we've sort of been waiting for in fintech, haven't we? Sitting there looking at Monzo and Revolut, and when are they going to IPO? What do you think?
Well, I think I like to think sometime in the future. And you saw the news on Starling Bank and the wonderful Anne Boden, and Anne's done great, and I'm sure you've chatted to her. So look, you're absolutely right. We're in that position now where changing the dual structure and the percentage share. Timing couldn't have been better. So, there are a few. The key thing is that there are a few people who weren't quite sure, but we are not trying to, deregulate down to take standards down. What we're trying to do is be more flexible, and so it is attractive for many fintech companies to, as you say, list in what is the fintech hub, and I think that it's great. And the Kalifa Review is as quoted by Christine Fayes, who was Lendinvest, is a seminal moment for the fintech sector in the UK.
I saw that.
We've got to deliver on the recommendations of the report. So it's all very well, as you know, Brett, talking about it. Now we've got to deliver. And the one that I'm particularly excited about, I have to say, is the Centre for Innovation and Technology, which I think that could really help us a great deal. And quantum computing is coming next. I think the UK and government has worked out that tech is critical over the next 5 to 10 years, and we've got an advantage around fintech.
Yeah, I mean, Oxford's doing some great stuff with quantum computing, as an example.
And I would throw life sciences in there, but that's not really my area. But with the vaccine, that is part of that too. So life sciences, healthcare, fintech are something that now we're on our own out of the EU. We need to really push forward on these things, and then we can talk about green as well. But that's also the other opportunity.
So the Kalifa Report, I love that you've got T.S. Anil from Monzo, you've got Nick from Revolut in the report making their comments, as well as Christian. But it talks about 3 broad prizes or benefits from this commitment to fintech, across the UK. It talks about jobs. We've discussed that previously. It talks about trade, but one that I thought was interesting is inclusion and recovery was brought out. So, how do you think, at a time when since 1990, every day since 1990, I think this is the famous quote that a bank branch in the UK is closed somewhere, and this trend is happening also, of course, in the United States, and it's happening globally because we've got bank accounts in our phones now. We don't need to go to branches as much, but that does tend to also complicate the inclusiveness aspect. So, how are you finding fintech? You mentioned Wise, previously known as TransferWise, and others as an example. But how has fintech changed the inclusion formula in the UK, do you think?
Well, so I think we've got further to go. We aren't where we'd like to, but the financial inclusion, everyone has one of these, smartphone that I've got. The majority of people, we're spending a huge, you're going to hear in the next month or so about how much money BT is going to spend on broadband. We've worked out we need to go the next stage. So everyone has the internet. And so that in itself is where we want to get to. But it's also very much part of the levelling up agenda that this government has. And don't underestimate what they're trying to do. You've just seen announcements, the Treasury are moving people to Darlington in Yorkshire, and then you've got Leeds have just announced something that's happening there. Manchester, I think that I read today that the transport department are moving people up to Manchester. The levelling up agenda is really critical. And that, in a way, has already happened a bit with fintech. And I go on virtual trips around the country, and I went to Birmingham just 2 weeks ago. Brett, I mean, it's incredible the things going on in Birmingham. I mean, it's a really dynamic city.
My mum was a Brom.
And that's, right, that's great. Yeah. And that's before HS2 is even finished. So you can already see the excitement that's going on. And what is really changed is that all these big cities, Leeds, and I'm a Durham alumnus, but let me put Durham and Newcastle in there, but Leeds and Manchester, for example, and Birmingham particularly, all the universities are hanging on to their talent. Here's a stat I got out of Birmingham on my trip. 55% of the graduates are now staying in Birmingham. Now, when I left Durham, we all came to London. So the other thing I would say that was mentioned in the Kalifa review and mentioned in the budget a week later was immigration visas. So we need special immigration visas for skilled workers. And, I actually think a lot of that may be more for London than for the rest of the region because they're hanging on to their talent. And the final thing I'd say is that every company, whether it's a fintech startup, and TransferWise will confirm this, or Wise, one of the reasons why they either double down or set up in London or in the UK is because we have the global talent. And as long as that talent stays in the UK, we'll still be very successful in fintech and tech and many other industries.
Well, I know the Wise guys personally, having been with them when they were just a wee startup before they had this 800-pound unicorn gorilla, right? But I did notice that foreign talent represents about 42% of UK fintech employees, and a big reskilling opportunity for the UK workforce. It's estimated that 90% of the UK workforce will need to be reskilled by 2030. That's from the Learning for Life report, CBI.org. In the UK. So it would appear that, this is a big opportunity for those outlying cities, Manchester, Birmingham, etc., in terms of...
and Cardiff and Northern Ireland. I mean,
exactly.
I mean, in Belfast, there's a wonderful company called Fintru that I always mention, which is incredible, employs 300 people, quite a lot of them in Derry, Londonderry, near Coleraine.
So, what does a reskilling program of that scale look like? It's not just fintech, obviously.
No, I mean, that's a very good question. And I think that's part of the action plan that needs to be discussed. I mean, we'll get the new visa stream to me is a no-brainer. And you get that access. And then as far as the upskilling, we need to do that, and it's a recommendation, and that needs to be taken up with government, and hopefully that will be. But also, it's also part of also the supporting, work placements and, various things, apprenticeships that we need to do a better job at around the younger generation coming through. I mean, at the moment, it's 75,000 people we think are employed in fintech, and it will go north of 100,000 by 2030. It comes back to my point, Brett, is that, Ron has written this wonderful review. We now need to deliver on it. And hopefully, having had it, backed, and we were the Secretariat of the City of London Corporation, but the Treasury very much said we want this review. So now we'll hopefully get it set up, the various bits that need to be done to deliver it.
I'm just looking up a stat from my new book, actually.
Okay.
We're talking.
Tell me about your new book, Brett.
Well, so I didn't want to make this a plug for the book, but it's called The Rise of Techno Socialism.
Okay.
So I think I'll send you an advance copy. Hopefully you'll find some interest in it. But I was looking, it's actually quite interesting that this is a figure from the research. This is research that was published in September 2018. And it's from the American Enterprise Institute. And it looks at US and UK economic growth from 1990 to 2015. And it reports that
absent immigration, inbound talent coming into the US, their GDP growth would have been 15 percentage points lower over that period. And for the UK, 20 percentage points lower without that immigration, and the EU even higher. Strategic immigration, that's going to become, I think, a big differentiator for the 21st century.
I totally agree with you. And that's where, in a way, London is an expensive city, no doubt about it. It's a wonderful city, as you know. But if you're coming in from elsewhere in the world, one of the places you would want to go and work potentially is London. So that's why this immigration visa, I think, in a way, will benefit London, but it will benefit other cities as well. But I think other cities, as I say, are retaining a lot of their talent. No, it is. And I think with what's happened with COVID and what's happened with Brexit, a number of people have gone back to their European countries. So it's becoming even more important, this talent. And look, the other thing is that I look on my travels around the world at areas that are doing well in fintech, and we always know what Singapore are up to, and they're outstanding what they achieve. But I think India is a country to watch. I think there's something really happening there in India, and it's interesting that our Prime Minister is going out there in the next month or so, and all the fintech discussions I've had, and talk about financial inclusion and what India's done. I mean, there's always a divide. America and here in the UK, we've had these landlines. That was a disadvantage. To start with the old mobile phone and go straight into that, financial inclusion is what's worked in the favor of potentially Africa, but certainly Africa and India. But so I think it's really interesting. And, I think there's a lot of talent in India, and it wouldn't surprise me if a lot of that talent hopefully comes to the UK as well. So look, it is an exciting time, but it's also an exciting time around green tech and green finance running into our COP26 agenda. And that's another area that is going to be very important for the world and for the UK as well.
Now, you've had a bit of competition recently. Amsterdam with their exchange. Berlin has been obviously trying to attract fintechs, as have some other hubs throughout Europe with the sort of in the post-Brexit world. Do you guys feel like London has to step it up, even though London's clearly shown leadership in fintech around the world? I get the feeling that the Kalifa Report is sort of saying we can't rest on our laurels.
So I agree, we can't rest on our laurels, and that is exactly what Ron's saying. But the headlines are sometimes deceptive. And the headlines on Amsterdam is, we are no longer in the EU, so of course European share trading is going to move to a European country. Right. Yeah. But, it was a little disappointing in some of the big business papers who made a huge deal of Amsterdam. And of course that was the headline, and that's what people who don't know.
Obvious now that you put it
exactly. And so look, I mean, we are, we're very conscious of it. I did a North American virtual trip, saw 14 different companies, and one of the CEOs of one of the biggest banks in America said, "We love London, we love the UK." And I tell you, the positivity from my trip was enormous. Not one of them said, "London's not going to stay your headquarters." Yes, we recognize that your European friends will chip away, but it doesn't change the fact that London is still for us the number one center. But we aren't going to be complacent. And the other thing I would add is, and this came out loud and clear from my trip, my virtual trip to North America. People forget, and the Europeans need to remember this, people are in London not just to trade Europe. London is an international marketplace. Correct. And people are there to trade globally. We have the language, the time zone, the rule of law. And the funny thing is that people also forget, we have an insurance sector that is 27% of the total GDP of the City of London. No other city in Europe has an insurance sector. No other city in the world has an insurance sector quite like London's. And with cybersecurity, resilience, climate change, it's only getting bigger.
And of course, it was the Great Fire of 1666 that gave birth to
the coffee shop,
much of the London insurance business, and before that was the shipping firms of Genoa and so forth. But being a good futurist means you've got to know some of this past stuff.
Well, no, I mean the history is part of our culture.
Yeah.
And you've been to London. And also, as you mentioned, 1666 and the Great Fire of London, the street names are all still the same as they were back in 1666. And one of the ones I always thought was quite amusing was that Trump Road goes into Russia Road.
I'm not going to even get into that. That's a good one. I've actually described, when I described some of the future tech, for example, with education, I've said, what about if you had augmented reality glasses? Because Apple's going to release these reportedly next year, see-through VR glasses. And you go down to Monument and, you can put it in 1666 mode and see what it would have been like in London.
Amazing.
Prior, you could do that sort of stuff with the technology now. It's pretty wild. But so two sort of questions in the time we've got left, Lord Mayor. One is, undoubtedly, the world has looked to London for the contribution you guys have made in fintech. But how do you think that is now translating into other industries? You mentioned life sciences as an example, but is that being used as a template for other sectors in the UK?
Very good question. So I think life sciences in a way was ahead of fintech because it was before fintech. What's happened is with fintech, because it is so much startups. And look, I'm not an expert in life sciences, but you know how much there is in R&D and research and spending before you get the product. Hey, look, what happened with the vaccine is incredible. The fastest, if you and I are having this conversation last year, and now I've had the vaccine, we'd never have believed it. Well, we didn't know it was going to be as bad as it has been, COVID-19. So I think it's a longer cycle, and there are pockets of expertise around life sciences, whereas fintech, it seems to have expanded further around the universe, around the UK. And I think that other areas, climate and change and sustainability, renewable energy are sort of following the same path.
Well, that was the second piece. I wanted to talk about how fintech can help us adapt to climate change. We see a lot of NFT activity and other things now, but how do we actually start to get some economic value in the system that isn't just shareholder return, that's actually, carbon output or, sustainability goals and things like that into sort of market valuations potentially?
So I think one can get that because through the natural investment. This is where finance is so important to 2050 and their zero emissions, because we aren't going to get there without finance.
Right.
So when I held the Green Horizon Summit with Mark Carney at the Mansion House, we had over 90 countries and attending. It was all about finance is the key to getting to 2050 because we need. But that two things. One is climate change and sustainability investment is going to, one, create jobs, and two, create returns. But it's doing a good thing and it's building back better. You've heard that phrase many times, and that's what we're trying to do. I think at the moment, there's a huge amount of investment going into projects. But in my travels around the world, whether it's the big sovereign wealth funds, they want to invest in sustainable projects, but they need to find the projects. So there are only so many wind farms or so many solar parks you can invest in. But there are lots of other companies now popping up, rather like fintech, let's say 4 or 5 years ago, popped up. So the startup culture is there. I'm getting things across my desk constantly about, here's another, whether it's the asset manager who wants to just invest in sustainability. We've already got those, but more and more people investing in ESG funds. I think it was $71 billion that went in to ESG funds from April to June last year. And, it's over $1 trillion now. So the capital's there. We need the projects. And there's a bit of a time lag, rather like after the financial crisis. That was really how fintech started, because everyone said, we've got to change this. We can't have the big banks dominating the disruptive technology. side of it. And I think that's what's happening a bit on the green side. And, this COP26 is known as the Zero Emissions COP. And in order to get to zero emissions, we need everyone to be on board. And that is very exciting as far as investment's concerned. But
part of it
there may be...
Sorry, part of it's transparency, right? Is now we've got the data, we've got the ability to say we can tell as a bank if you're supporting coal plants, for example.
Yeah, I agree. Well, look, I mean, it is. It's now that we've got the data is key. But transparency, and the issue is going to be forced, and we're going to make it work. So it is in a very exciting time for the UK, particularly around, as you say, those sectors of fintech and the green agenda as well.
So to wrap it up, Lord Mayor, we've got listeners from all around the world. If people are still thinking about coming to the UK to maybe expand their local startup that they've created offshore, where would you suggest they go to learn about making an entrance into UK?
Well, I mean, I'm slightly biased because I'm the Lord Mayor of the City of London, but I also recognise that, Brett, the whole of the UK is in pretty good shape and there's huge amounts of talent. So if London isn't necessarily for some startups, whether it's Belfast, Northern Ireland, Cardiff, Edinburgh and Glasgow, Birmingham, Leeds or Manchester. And I'll throw Newcastle in there because, as you know, I love the Geordies and it's a great city.
They've produced some talent in the past, that's for sure.
They have.
Yeah. Well, Lord Mayor William Russell, thank you once again for joining us on the show. We really appreciate it, and we're very grateful to have you come on anytime you have some new news for us. The Kalifa Report is available online. It's Kalifa, Kalifa Review of UK Fintech. Make sure you check it out. Some really interesting stats in there, and of course, some of our fintech friends appearing in the notes there. And again, great shout out to Ann Bowden and the Starling folks for their newly minted unicorn status over the last month or so. Lord Mayor, thank you again for joining us on Breaking Banks.
Brett, thank you very much for having me.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.